This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. Asian stocks are set for a cautious start to a historically weak quarter, despite Wall Street extending a record high. The dollar is weaker after its biggest first-half loss since 1973. President Trump threatens Japan with a fresh tariff as the July 9th trade deadline ticks closer. The White House saying several agreements will be announced next week. Plus, a Bloomberg scoop. Apple considers using AI from rivals to power its new version of Siri, sidelining its in-house models.
And this is a setup across Asia. We've been watching the offshore yuan very closely because we had better than expected official manufacturing PMI numbers. We are getting the Caixin PMI numbers later today. We had seen a little bit of support in the previous session. 715 is your level as we continue to watch the future space. We have already seen 5 sessions of gains for the Nikkei. Right now, futures not doing much. Of course, we still had that positive leading coming from Wall Street, the best quarter since 2023. But still, given those comments and threats from President Trump on potentially more tariffs on Japan, we are seeing a little bit of downside pressure as we're watching the Japanese yen very closely as well, just past that 144 level against the U.S. dollar. But of course, this is interesting because we have seen already significant strength for the Japanese currency. We're talking about the best first half in about 9 years against the greenback. Today, we'll also be watching the JGB space because we do have an auction. And of course, we have seen a lot of volatility in the bond space. We do have Tankan Business Survey also later this hour, so do watch out for that. But take a look at how U.S. futures are setting up because I said we had seen the best quarter since 2023. We're talking also about 25% gain since the April lows. Right now, U.S. futures are under a little bit of pressure, but we have that positive lead-in already with another record high. We're following the Treasury space. We saw Treasuries gaining ground. The yields are down across the curve. We are awaiting, of course, jobs data out of the United States, not to mention that potential of more Fed rate cuts also being factored into the markets. A little bit of pressure for oil, Haidi.
And some pressure when it comes to the uncertainties over tariffs and the trade war, right, Shery? With President Trump saying he may impose a fresh tariff level on Japan over their unwillingness to accept U.S. rice exports. His threat comes just over a week before the deadline for higher trade levies. The White House is signalling that deals may only come after the July 4th holiday. Let's bring in the latest with our digital politics editor, Ramo Varghese. And so there's a lot of back and forth. Where do the talks stand with Japan?
Despite what Trump posted on Truth Social, one of his top trade advisors, Kevin Hassett, reassured reporters saying discussions are still going. Nothing has been decided. So I would expect these discussions to continue based on what Kevin Hassett has said right up until the July 9th deadline.
I guess the key question right now is what happens to those tariffs and whether they could actually go up or we could see some different tariffs for Japan as well, according to President Trump.
That's a threat that Trump has levied against our major trading partners. He has said that if we don't come to a deal, then we're just going to set a tariff and walk away. It seems like with different countries, though, I mean, for instance, our colleagues have just reported that the EU, for instance, it has signaled that it is willing to accept Trump's universal 10% tariff if they can get lower rates on various sectors, such as pharmaceuticals and alcohol and automobiles. So I would caution that things are still in flux. Nothing in regards to Japan and other nations have been formally announced. The only frameworks we have seen are with China and the UK, which I must add are fairly broad. We do not have detailed trade deals with any countries just quite yet.
The July 9th deadline also applies to the EU as well. How are those talks going?
They seem to be cautiously optimistic, at least from the EU side, based on what our reporting is suggesting. They are hopeful that they can get an interim agreement, for instance, so that they can hash out other details later. And as I mentioned, the EU is willing to accept a 10% universal tariff, but they want to see some lower rates on these key sectors, such as autos and pharmaceuticals and semiconductors.
Could the deals stuck with the UK or the framework with China act as sort of a blueprint for anything else to come with these other trading partners?
It really depends, I must say, by the country. For instance, Trump's White House press secretary, Caroline Leavitt, has said that we're nearing a deal with India. And there are various sectors that would be of more importance to India and to various other countries. For instance, our reporting has suggested that the U.S. is nearing agreements with Vietnam and South Korea. So those countries have different asks based on these sectors. That is a major concern for a lot of these countries. If they accept the universal tariff, but then they'll be facing these rates on these sectors that are important to them. So I think we will see by July 9th broad frameworks for roughly 10 of the U.S. trading partners, as the Commerce Secretary Howard Lutnick has suggested. But it will be unlikely that we will have very detailed trade deals, just judging by the way these things have been going.
Bloomberg's digital politics editor Romy Varghese there. And we take you live to Capitol Hill because Republican Party leaders are trying to overcome internal divisions over President Trump's tax and spending package. Democrats planning to offer amendments to exploit the divisions. For more, let's bring in Bloomberg's Alicia Diaz, who's on Capitol Hill. Alicia, so what do we know at this point about how many people the majority leader actually needs to win over?
Right. So the majority leader needs to win over exactly 3 Republicans to get this legislation through the door. And as you mentioned, Democrats are kind of pushing Republicans to be in a politically uncomfortable position, offering a series of amendments. And this could go on indefinitely in theory. It is unclear right now when a final passage vote might be. We're hoping maybe in the early morning tomorrow or sometime later in the day. But regardless, they are nearing closer and closer to the self-imposed July 4th deadline. And some of these tensions still remain between the Republican holdouts. And so these amendments might be a way to find a compromise and get some of these issues back through the door.
What are the key provisions and the sticking points that are being fought about at this point?
So right now there's a couple main groups. One is the so-called deficit hawks. And so the people who think that this bill might be too expensive, Senator Rick Scott is one of those people, and he's proposing an amendment to cut Medicaid even more than what the bill already does. And this is a little controversial because some other Republicans say that the Medicaid cuts are already too much and it might hurt some of their constituents and harm institutions like rural hospitals in their home state. Senator Susan Collins is issuing another amendment to boost the funds for those rural hospitals because she's worried about the cuts to Medicaid. So there are these, concrete groups that are at odds with each other. Regardless, they will continue to work through the night to possibly work through some of these issues.
And the fact is that we need to really assess the distribution of the costs and benefits of this bill, right? We have heard from analysis from economists from the Budget Lab at Yale University that the bill could actually cost the bottom 20% of taxpayers an average of $560 a year, while giving the richest a boost of $6,055. What does the American public think about this?
So it may be too soon to tell, but early polling has shown that Republicans, or Americans generally, are not super keen on the idea of cutting some of these safety net programs that might harm lower income Americans or the disabled. Of course, as these amendments get through the door, things will be changed, and over the coming months, we'll see how this continues to play out in the polls. But Democrats have used this messaging that this bill is going to be hard for lower income Americans and benefit the wealthiest. And some of the nonprofit institutions coming up with these economic analyses, like the Yale Budget Lab, are really bolstering that point. And it could make it tricky for Republicans as it comes to midterms and future election cycles.
So what happens if they can't reach agreement?
So in theory, they do want to meet this July 4th deadline, but they can continue to work things out through the summer. The big sticking point for them is the so-called X date, when the U.S. reaches its debt limit. And that could come later this summer, but this is really a good push for them to get this out the door and worry about other things like their annual funding bills later down the road. So we'll see, in the next day or so if they're able to reach these agreements and get this out the door before the July 4th holiday.
Bloomberg's Alicia Diaz there. Well, coming up next on the Asia Trade, Natixis CIB joins us as they open up a banking branch in Japan. We'll be getting their business outlook for that market, including the rest of the region as well, with the APAC CEO, Bruno. Plus, we'll be talking markets with DoubleLine and the future of AUKUS with CSIS. More ahead. This is Bloomberg.
Natixis Corporate and Investment Banking has established a new branch in Japan as it works to scale up operations across the Asia-Pacific. The lender says its expanded banking license will allow it to offer a broader range of financial services to clients. Joining us now is Natixis CIB's APAC CEO, Bruno. Bruno, great to have you with us. So you've been in Japan for a while, but a banking license, it's new.
Yeah, that's... Look, we've been in Japan since 1993, and opening this branch is... So we have a securities right now, and the opening of this branch is it's a commitment to the country. It's a new step in our development in Japan, and look, it's day one for this bank, so we are absolutely excited, and I want to thank all the teams who worked on it, so very exciting time for us.
Congratulations on the launch, but why now?
Look, it's first, it's as I said, we've been in Japan for a long time. We've been developing in Asia Pacific, and in Japan we've developed our capital market activities in first place. And now we see that it's time for us to also develop the banking part of our business. We have two strong franchises at Natixis, and plus, so timing of our own development, plus the market in Japan is also growing, booming. It's a very exciting time. So we feel like the combination of the two is making it very attractive right now. Which is
why you're not the first ones trying to expand the markets here. Do you have enough people, enough talent? Are you hiring in Tokyo?
Yeah, so we have already a base and a pool of talents and people here in Tokyo, in Japan, but we are also supporting them with people in Hong Kong and in Singapore and Paris. But we are going to hire additional people, yeah, for sure.
How many people are we thinking about?
So right now we have 68 people on the banking side, and look, we're going to grow our expertise here, and hopefully we aim to double from in the next 5 to 7 years. Yeah.
Hundreds.
Yeah, 100 and 100 plus. I mean, it will all depend how we are successful, but I'm very confident.
Bruno, what are your expansion plans in terms of the key markets outside of Japan at this point?
So right now you mean in Asia Pacific, right? Yes, so in Asia Pacific, our key markets right now, it's of course China, it's also Southeast Asia, Australia, Korea. We've opened Korea 3 years ago. We are very happy with how the business is developing there. So Japan, again, we've been here a long time, but we feel like there's a big potential for us to expand in Japan. So that's where we feel that we should grow the fastest in the coming years.
Tell me about specifically what your interest and sort of priorities are in Australia.
Well, in Australia, look, we are a bank that likes infrastructure. We like energy, renewables in particular. We like telecom and telecom infrastructures, metals and mining. So Australia has a lot to offer. We've been developing very fast in Australia over the last years. We made a strategic partnership with Azure Capital on the M&A side. So it's been a tremendous success for us in Australia, and we want to replicate that in Japan.
In terms of the market sort of segments, how much pressure are you seeing in credit, for example, or are there other areas that you might sort of adjust hiring and priorities?
So in terms of markets, look, we big in credit indeed, but it's not only Natixis is it's a CIB with strong advisory capabilities. So we aim to really play on our strengths. Our strengths are, of course, sector expertise, as I mentioned, but it's also that we are a global bank, so we can accompany our clients globally. Investors coming in Japan or in Australia, but also these companies to go abroad. This is really where we play. We don't want to be a domestic bank. It's not our objective here. So this is really how we position ourselves to differentiate in a market that is, of course, very competitive.
We're seeing a lot of activism, deals making interest here in Japan as well. Are those the opportunities?
Yeah, exactly. So this is exactly what we see. So one of the reasons why we are very excited is some of our global clients, private equity firms, infrastructure funds are looking to come into Japan, and they want to rely on people they know well, with whom they have banked and they have done deals across Asia Pacific or globally, and they are looking to people who can help them to enter in the Japanese market or to secure transactions. This is exactly what we want to do.
We hear about more companies and CEOs asking for advice because they feel like they're vulnerable to shareholder activism. Are there any specific sectors where you see more vulnerabilities here in Japan?
Vulnerabilities, I don't know, but for sure our focus again will be on infrastructure, on energy, on telecom and digital infrastructure. All these sectors which are under a huge transition. This is where we will want to help our clients to achieve their goals. What I note is activists are here and they are challenging corporates, and this is for good to maximize shareholder value. We see this as an opportunity to help our clients to improve, but also to help our global clients to invest in Japan.
So for Natixis, when it comes to Japan, what's the ratio that you're expecting for your business of how much will come from Japan versus the rest of Asia? And how much is Asia for you?
For Asia Pacific right now is a little less than 15% of our global CIB revenues, and we want to grow that over the next years. We are growing 10-12% per year for the last 5 years, and we want to accelerate as we speak. So we are making investments to achieve this goal, and again, it's quite exciting. We've been committed to Japan and to Asia Pacific. And hopefully we will get above 15% very quickly, and perhaps closer to 17-18% going forward.
For Asia Pacific,
into the global.
Into the global, and what part will Japan be of that?
Japan will be a big part of this growth. Yeah, probably 50% of this growth.
Oh, amazing! Thank you so much for your time today, Bruno.
Thank you for having me.
APAC CEO at the Natixis CIB. Of course, they've just opened their new branch here in Japan. Coming up, Apple said to be considering using OpenAI or Anthropic to power Siri as its struggle with generative AI continues. Details of our exclusive story next. This is Bloomberg. Bloomberg has learned that Apple is considering using AI from the likes of Anthropic or OpenAI to power a new version of Siri. Shares closed up over 2% after Bloomberg reported on what would be a major shift for the iPhone maker. Our managing editor for Apple and consumer tech, Mark Gurman, broke this story for us and is joining us now. Mark, I've been waiting forever in order to upgrade my iPhone. Will this change be significant enough with AI capabilities involved?
Well, certainly there have been a lot of people holding on to their iPhones, and the new AI features, Apple Intelligence, revamped version of Siri, require the newer models. So Apple was hoping that would spark an upgrade cycle. You had analysts essentially lying to the market saying the AI features would create a super cycle, right? But the reality is it didn't. didn't work so well. The features were underwhelming. And one of the reasons the features were so underwhelming was because of the underlying technology that Apple developed. That's called Apple Foundation models. That's a direct competitor to models like ChatGPT from OpenAI, Gemini from Google, or Claude from Anthropic. So what Apple now is doing is considering partnering with Anthropic or OpenAI or another provider to redo the back end of Siri in order to make it much more modern and work more effectively. We've been waiting for some time for a more conversational Siri, a much better performing voice assistant, and if Apple partners with Anthropic or OpenAI, we're probably going to get that.
This is a monumental, if it happens, this is a pretty monumental and frankly quite embarrassing reversal and retreat.
It's a bit of a retreat for Apple. They've been all in on foundation models. Now, the reason they've been all in on their internal models is because models are so important to the future of the company and the way their products work, the way the hardware works, the way the software works, the way services works, right? You don't really want to siphon off something that critical, right, to a third party. But it has been working so poorly that they're going to start losing sales and risk continuing to harm the reputation if they don't do something. And so they are probably going to do this. They are continuing to evaluate it. There is a simultaneous project in development that uses in-house models for LLM purposes for Siri. And so they're battling it out internally. But this shows the stakes are so high, and it shows how Apple feels about its AI technology right now internally.
It must not be great to be part of Apple or the team developing the in-house AI at this point.
The morale is not awesome. This comes at a time when you have Meta offering $20 or $40 million annual packages, right, to AI and large language model developers to get them to join, the social networks' AI efforts, right? If you are an Apple employee who's at the top of their game for LLM development, and you feel that Apple is not prioritizing your work, you may be interested in going to one of those companies. And so that is what Apple is grappling with right now.
Does fixing the AI issue fix a lot of the other demand-side problems that Apple has right now?
I think the AI issues is just one component. I mean, overall, the product strategy is getting a little long in the tooth, and you're going to need to see some significant upgrades there too. But certainly fixing the AI problems will go a long way for this company.
Our Bloomberg managing editor covering Apple consumer tech, Mark Gurman there with that Apple scoop. Another story that we're following, Meta CEO Mark Zuckerberg announcing a major restructuring of his firm's AI group that includes a series of new hires. Meta's AI efforts will now fall under a new group called Meta Superintelligence Labs. Superintelligence refers to systems that can do tasks as well as, or potentially even better than humans. Alexander Wang, who's a former CEO of startup Scale AI, will lead the new Meta group, according to an internal memo. Wang will serve as the Chief AI Officer. Take a look at what we're watching when it comes to US futures at the moment. This is a picture as we head into the start of trading here in Asia. A little bit of downside there when it comes to S&P futures. This is, of course, as we see US markets still pretty close to those record highs. Some of the nerves when it comes to the uncertainty over President Trump's tariff agenda are starting to play through. This is Bloomberg.
This note to the Fed chair. It says, Jerome, you are as usual too late. You have cost the USA a fortune and continue to do so. You should lower the rate by a lot. Hundreds of billions of dollars are being lost and there is no inflation.
White House Press Secretary Caroline Leavitt there reading out President Trump's letter to the Fed chair. Jerome Powell has continued to see that expansion of the president's criticism of the Fed beyond just the chair, and also now putting the blame on the board as well, saying that his entire board should be ashamed of themselves for not lowering interest rates. Well, this is a picture as we take a look at treasuries. They actually managed to wrap up the best month since February ahead of this week's jobs data. Yields were falling across the curve. Traders now focusing on the upcoming jobs report and the potential rate cuts that we could see as soon as September. There's quite a bit of confidence there that we'll see at least two moves by the end of the year. Let's bring our MLife strategist Mark Cranfield, who joins us now. Some parts of the market see a move actually before that, potentially as early as this month.
Yes, I think there's a half a chance for July. We've still got a few weeks to go, and there's time for Fed speakers to get a little bit more aggressive in trying to steer the market that way. You can't really say that traders are convinced yet. They're pretty sure that September is going to be a rate cut from the Federal Reserve, but they're not being very aggressive about their views for July. But it's always, you have to be careful in these situations because there's always unintended consequences. When President Trump puts pressure on the Federal Reserve to lower interest rates, of course it spills over to other assets, and you're seeing that with the losses for the US dollar. As we're widely reporting, it's been a very rough first half of the year for the US dollar, the worst since the 1970s. And within that, the euro is especially strong, and that's helping the Chinese exporters because the euro-yuan rate is also the highest for a decade, and that's just at the right time from the point of view of Chinese equities because they're looking for other markets away from the United States. While the trade talks drag on between the US and China, China's trying to redirect its earnings from other parts of the world. Europe is obviously a prime example. So when you've got the euro very, very strong against the Chinese currency, that's giving Chinese exporters a way into that market. And what we saw with a time lag about a decade ago was that when the yuan weakens against the euro currency, not long afterwards, you get a surge in Chinese equities. So people will now start to refocus and think that for the months ahead, it could well be that Chinese equities are going to be the big beneficiary from this weakness in the US dollar. So President Trump, he may well want lower interest rates in the United States, but there's knock-on effects, and one of them could be for Chinese equities.
That's really interesting, the roundabout way that you could actually benefit Chinese assets in this way. But when it comes to the pressure on the U.S. dollar, of course, fiscal concerns have also been key. And now we're getting this spending bill trying to pass Congress. How vulnerable are Treasury yields to this bill?
It's certainly something that international investors will watch very closely. We've had the Treasury Secretary Bessent saying that at this level of yields, they're a bit too high. He doesn't want to increase long-term funding. Well, the flip side of that is that if the deficit widens by a few $1 trillion, as some people are expecting, that means you're going to issue a lot more short-term debt. Now, the people that watch that very closely are the rating agencies, because if you skew your debt issuance to the short-term Treasury bills, 6 months and 1 year, that kind of area, it means you have a mismatch in your maturity flow. Ratings companies do not like to see too much debt skewed towards the short end rather than the long end. They like to see a nice stable pattern where maturities are coming regularly over a long period. If you push too much to the short term, you risk causing a credit event. And that means that you may well get put onto negative outlook or even downgraded again, as we saw with Fitch not too long ago in terms of the United States. So it may well be that the United States pushes through this bill, increase the deficit, and they say they don't want to increase long-term funding. Well, they might not have a choice because the rating agencies may tell them, you've got to match out your flows much more evenly over the long period, or you risk a sovereign downgrade to the United States. And that can spill over into the equity market, into the currency, back into the bond market. All these unintended consequences are something the United States will need to watch very carefully because investors are, and traders will jump on it very quickly. If they see a sign of weakness, they will not hold back.
Mark, worst 6 months for the US dollar since 1973. What's the trajectory from here?
Probably more of the same, really. The currency world is very much about positives and negatives, and when they line up together, that can be very damaging for one of the currencies. So one of the biggest beneficiaries in the first half of the year is the euro. And the reason for that is that the euro story is improving at the same time as the US story is getting worse. That's almost like a perfect scenario for foreign exchange traders. They're always looking for weakness in one currency and strength somewhere else. That's playing out beautifully, and that's why the euro is at multi-year highs and probably on the way to 120.
Mark, and I want to get this in before I let you go, so super quickly. What about the yen? Because all of those variables that you just mentioned seem to apply to the yen, and yet we have been range-bound for quite some time at that 144, 145 level.
That's really about the Bank of Japan getting on with raising interest rates. They've been holding back, traders want to see a more decisive action from them. If the Bank of Japan talks up the chances for a rate hike in July, you will see a completely different scenario with the yen. Until they do so, the yen is going to be a laggard compared to other major currencies. It's really all about the Bank of Japan getting more serious about addressing the stagflation problems in Japan. Inflation is too high, rates are too low. Bank of Japan needs to tighten policy, and they need to get on with it, even though they're cautious about the trade talks. Then the yen will respond to that.
Bloomberg's Mark Cranfield there with the latest on the markets. Great to get your insights. And of course, we continue to watch the Federal Reserve as well, and the Trump administration wanting the Fed chair to actually get serious when it comes to cutting rates on that side of the world. U.S. Treasury Secretary Scott Bessent saying that Fed officials appear frozen at the wheel on rate decisions. Speaking to Bloomberg, Bessent also discussed the search for the next Fed chair and whether he'd consider the role himself.
I will do what the president wants, but I think I have the best job in D.C. We're making a lot of progress with the president's leadership. Think about it. We are going to have the tax bill on his desk by July 4th. We're going to be wrapping up the trade talks. So I think we've had great momentum, and we will be working on Chair Powell's successor over the coming weeks and months.
You had mentioned that an announcement could be as early as October or November, and Powell's term ends in May of 2026. How is the street supposed to navigate between that announcement time and the time between the term being over for Chair Powell? You were the one, I want to remind people, that had brought up the idea of a shadow Fed chair prior to the election. Is a new appointee supposed to be considered that shadow Fed chair?
Well, not necessarily. We'll see. There's a seat opening up, a 14-year seat opening up in January. So we've given thought to the idea that perhaps that person would go on to become the chair when Jay Powell leaves in May, or we could appoint the new chair in May. Unfortunately, that's just a 2-year seat.
So ultimately, do you think that there could be some confusion?
Well, I don't see why there would be confusion, because obviously there are people who are currently at the Fed who are under consideration. So why would there be confusion if that you add another candidate in January?
So what about Fed policy as it stands today? The president has voiced his preference for lower interest rates. There have been investors, but also most recently the Bank of International Settlements, warning about any inflation risks tied to the tariff policy. Realistically, how much can the Fed lower rates this year? And what is the level and rate of unemployment that would suggest a faster pace of rate cuts? Economically, what has to slow?
Well, look, I said during my confirmation, I won't talk about the mistakes the Fed's going to make. I'll only talk about the ones they have made. They made a gigantic mistake in 2022. And as I like to point out, medical studies have shown that people who fall tend to look at their feet, which makes them fall more. And my worry here is that having fallen down on the American people in 2022, Fed's now looking at their feet. We have seen no inflation from tariffs. If we do, which we don't have to, then there'd be a one-time price adjustment. Nothing is more transitory than that. So, Team Transitory, having failed the American people in 22, they seem a little frozen at the wheel here.
U.S. Treasury Secretary Scott Bessent there speaking with Bloomberg's Shinawatras. And a reminder that you can catch live coverage of a major monetary policy panel later today from the ECB forum in Portugal. That's being moderated by Bloomberg TV's Francine Lacroix at 9:30 p.m. Hong Kong time. More ahead on the Asia trade. This is Bloomberg. Well, as we've been watching the extraordinary decline in the US dollar, right, Shery, in the first half, in fact, the worst first 6 months of the year since 1973. We were just speaking to Mark Cranfield earlier, saying the trajectory going forward into the next 6 months and beyond looks kind of more of the same as we get dovish Fed pricing, softer eco data, heightened policy uncertainty, both domestically and when it comes to the global trade front. All of this is weighing on the US currency, and that dovish speculation is really key, right? Swaps are basically more than fully pricing in a September move from the Fed, starting to look at the idea of a cut at July as well as a potential possibility. There's now additional political pressure on Fed Chair Powell and his board as well. So it's hard to see sort of a situation, I guess, where you see that big recovery in the dollar. And it's interesting, we've been sort of talking about potentially, even as US stocks are at record highs, maybe this is a better indication that the whole diminished appeal of US asset narrative is not quite done with yet.
Yeah, and on that other side of the dollar trade, of course, we have seen that immense support coming from emerging markets. We're talking about the best first half gains in years when it comes to EM bonds, stocks, and currencies. So EM assets seeing about $10 billion in inflows in the last 4 weeks alone. When it comes to EM stocks, we're talking about a rally of about 14% or so in the first half. When it comes to currencies, 18 out of 23 EM currencies are up against the US dollar. Really, that flight from US assets, perhaps, as you mentioned, Haidi, not necessarily away from US stocks, but traders seem to be diversifying away from the U.S. dollar. We have seen, of course, treasuries, also a lot of volatility in that space, given President Trump's policies and, of course, the uncertainty over what's to come when it comes to tariffs. The Korean won also has been a big gainer in the overnight session, actually outperforming G10 currencies. South Korea's more than $200 billion sovereign wealth fund also making a big bet on North American investments, with the region accounting for more than 60% of its holdings. Korea Investment Corporation CEO Park Il-young told us exclusively why U.S. Treasuries are a key part of that strategy.
We are happy to the investment in the U.S. Treasury in a sense that the U.S. Treasury bond gives a very strong liquidity and stable returns, and also regardless of any short-term market volatilities, we are expecting the stable and the solid returns in the short term. So for the time being, we maintain our portfolio, the Treasury bond as the core portfolios, but in the longer term, we are mindful of any risks from the supply change from the investors, and also some policy uncertainties.
Long term, do you need to be rethinking that? How are you looking at your exposure to U.S. Treasuries longer term, and how are you looking at potential alternatives to U.S. Treasuries? Are there alternatives?
We are now reconsidering our asset allocation. We understand our long-term the returns are largely depend on our asset allocation. So among the fixed income investment, we are also interested in investing the credit, and credit bonds and the structural bonds, along with the U.S. Treasury, and also more fundamentally, we are now considering to our asset allocation between the fixed income, the global equity.
Do you see alternatives to public fixed income, and would you be looking to increase your weighting into things like private credit, for example, and private lending? And what role do you see that part playing in your portfolio?
Actually, we just start with the investment in fixed income in 20 years ago. Now we diversified our portfolio to the alternative investment, including, as you said, private equity, and real estate, private credit, and the infrastructure. So we believe the alternative investment will be our core asset in our portfolio in the longer term. So we plan to invest continuously, and steadily pace.
Park Young there, KIC Chairman and CEO, speaking exclusively with Bloomberg's David Inglis. Time more for morning calls ahead of the Asia trading day. BlackRock Global Fixed Income CIO Rick Ryder says he sees more opportunity in the stock market at the moment than at the long end of the Treasury curve. He told us that he prefers growth equities over long-duration bonds, which are increasingly correlated to stock market moves and no longer act as a hedge. And Bloomberg's MLive team thinks that the rally in Japanese equities will likely slow. The latest Tankan survey is out in a few minutes. It's also expected to show a moderation in business momentum. Compare that to the MSCI Asia ex-Japan, which is headed towards its strongest quarter since the end of 2020. You can get more on that story, all the day's trading in our Markets Live blog. That's on the Bloomberg at MLIV Go. You can get that market rundown in one click. There's commentary and analysis from Bloomberg's expert editors, so you can find out exactly what's affecting your investments at any given point. This is Bloomberg.
We have breaking news out of Japan. We are looking at the Bank of Japan's Tankan survey of business sentiment when it comes to large manufacturers coming in at 13. The estimate was for that 10 level and also for a decline. But in fact, we are actually gaining ground from the previous month that came in, from the previous quarter that came in at 12. The manufacturing outlook also better than economists had expected, coming in at 12. The non-manufacturing index in line with estimates, declining slightly from the previous quarter at 34. The outlook at 27 is a little bit of a decline from the previous month, but all in all, it seems better than economists had expected. Large all-industry capex estimate also higher than economists had expected, and an improvement from the previous quarter, coming in at 11.5%. For more on the Tankan numbers in Japan's economy, and of course, the dampening from President Trump's tariffs, let's bring in our economics reporter, Yoshiaki Nohara. So, Yoshi, is it okay to think that the numbers are at least better than we had initially expected?
Well, that is true. That the important figure today is the 13, the sentiment among large manufacturers, which are mostly exposed to exports. So this is a good news for the Bank of Japan, but I would say that it's probably premature to assume that all the clouds are gone.
Especially when you get comments from President Trump threatening new tariffs on Japan. But at least is the weaker Japanese yen at 145 at the moment helping?
Well, yes and no. I guess the weaker yen is providing some floor to exports, but we're not seeing that's being a major driver for exports any longer. So you have to keep in mind that the weaker yen tends to help exporters, but are we seeing the kind of the same engine that we used to see years ago? We're not seeing that any longer.
So what should we be watching out for next in terms of data points and broader eco trends that might inform how the Bank of Japan might be thinking?
Well, as Shery mentioned, that all the eyes are on trade negotiations between the U.S. and Japan. And next timeline, important to keep in mind, is July 9th, when the higher tariffs are supposed to kick in, barring a deal between the U.S. and Japan. So this, you have to remember that this is a live negotiations going on. There's no pre-written text for this talks. So everybody is watching every word and every development of these negotiations, and that's including the Bank of Japan.
We continue to talk about this perhaps virtuous cycle setting into the Japanese economy now. Do we have a firmer narrative to among company CEOs that this might be setting foot? Virtual growth in wages, people consuming more, demand that's actually led by the Japanese economy?
Well, I'm glad you asked that question, because there's a big question mark about that virtual cycle now, because you can confirm in trade data already that companies are choosing to cut prices to maintain the volume in exports. So
that is a key problem, right?
Exactly.
I mean, you have to raise prices, but we're hearing from Japanese companies that they actually don't even know how to do that at this point after years of deflation.
Right. Well, that is a key point, because if you can't raise prices and if you're absorbing the impact of tariffs to some extent by cutting prices, that's going to cut down your profitability, and that's going to limit your ability to raise wages. So that's concerning. What's
the expectation for the Bank of Japan's next rate hike then?
Well, I think the consensus is becoming that they will wait and see, next time as well, maybe throughout this year. That's what I'm hearing from some economists.
Japan economics reporter Yoshiaki Nohara there. Let's take a look at the flip side when it comes to, of course, the weakness that we've seen play out in the last 6 months for the Bloomberg dollar index. In fact, the dollar index overall has had its worst first half of a year since 1973, and all indications suggest that that dollar weakness story will just persist, with the dovish expectations now being priced in for the Fed, potentially even for a rate cut in July. We're sort of in for a chance there, as well as some of the broader US-centric uncertainties when it comes to trade, as well as domestic fiscal policy. You're watching not much of a move when it comes to the Hong Kong dollar at this point, but we are seeing more expectations. Barclays saying that the Hong Kong dollar will gain in the late part of the second half on a Fed rate cut and more interventions as well. 7.85 per dollar is kind of the level that they're looking at in the short term, and further advances in the second half of the year. The Taiwan dollar is also one to watch, as we saw it slump the most since May 2001. That's been fueling speculation that the central bank intervened to curb that Taiwan dollar strength as well. Dollar Taiwan rising as much as 2.5% in that session. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens with a positive lead-in from Wall Street. Another record high for the S&P 500, Haidi, but of course a lot of caution given the trade tensions still in play. This as we continue to watch what's happening over in Hong Kong. We do have the flag-raising ceremony. Leader John Lee leading this celebration of 28th anniversary of the Hong Kong handover to China.
This is we continue to watch the situation when it comes to the HKMA and what they're doing when it comes to the currencies as well, that defense of the currency peg. We're watching really the flip side of that extraordinary dollar weakness story that we've seen play out in the first half, the worst 6 months for the US dollar since 1973. Those pictures there of Hong Kong marking the 28th anniversary of the handover there. And we, of course, Shery, continue to watch for how much further upside we could potentially see in these equities, especially that rally in Japan.
Yeah, we have seen 5 sessions of gains for the Japanese equity markets, but we do have a slightly stronger Japanese yen at this point, past that 144 level against the greenback. So perhaps a little bit more downside pressure for the Nikkei, down 0.4% at the open. And this, of course, as we continue to digest, as you said earlier, the sell-off in the U.S. dollar that has led to the Japanese yen seeing its biggest first-half gain against the greenback in 9 years. We are digesting the June large manufacturing Tankan survey coming in better than expected at 13, and that's really led to bond futures falling after that estimate beat. But we'll be watching the JGB space because we do have an auction later today. We do have a 30-year auction later this week as well. Take a look at how Korea is also opening, because we had seen the won outperforming Asian peers. Optimism over potential trade deals. The Kospi was gaining for the first time in 3 sessions, and we continue to see those gains extended for second session with the Kospi up 0.6%, Haidi.
Take a look at how we're faring when it comes to Australia at the moment, Shery, as this is the picture as we get really that slow, staggered start to trading when it comes to equities. We're seeing a pretty flat to sort of upside there. Watching some of the property developers as we see that rise in property stocks, property prices, I should say, again, climbing for a 5th straight month. There's the Aussie dollar just pulling back a little bit after quite a period of sustained strength in the back of that weakness in the US dollar story. 65.77 still where we're at, comfortably above that 65 US US cent level. And taking a look at treasuries, as we had really a pretty decent quarter, a pretty decent month, I should say, the best month since February ahead of the jobs data this week. Very different picture to what we've seen with the US dollar, but of course a lot of these expectations now being solidified around Fed expectations and whether or not we get a first cut in September, potentially even a chance of it in July, Shery.
Let's bring in Bill Campbell, portfolio manager at the investment management firm DoubleLine. Of course, Haidi was talking about the Fed's trajectory. What do you expect to see in the jobs numbers this week that could have implications also for the Treasury space?
Hi, thank you for having me. I think that there have been a lot of big stories over the course of this year. You covered the biggest one, the falling U.S. dollar. But more recently, on top of easing trade tensions and easing geopolitical tensions, we've really seen U.S. yields start to come meaningfully lower. And that's helped global yields, even in Asia. When we look at the JGB, long end of the interest rate curve there, come lower as well. I think that the Fed is going to continue their wait and see policy, as there are a lot of big questions not only for the U.S. markets, but for Asian markets as well, revolving first around inflation, where Jay Powell is taking a wait and see approach to see if the pass through from the tariff policy so far and the weaker dollar will eventually lead to higher near-term inflation outcomes. But balanced against that, we need to keep a very close eye on if the labor market starts to crack. I know the market, the forecasted expectations for this Thursday's non-farm payrolls numbers, 110,000 as of the last time I checked earlier today. I think that's about fair. I don't think the U.S. labor market is breaking in a meaningful way at the moment. We are watching rise in continuing claims, but we also have seen an increase in U.S. immigration policy that has allowed for the labor market to remain strong despite the lower headline non-farm payrolls prints. So I think when you combine all of that into the picture for the outlook for the Fed, it keeps them on hold through this summer, and then we'll get a better clue, I think, as we enter the fall, on both what the inflation outlook looks like, but also more importantly, what the growth outlook looks like. And the subdued growth outlook and the potential for, if labor markets do start to weaken, keep a September cut potentially on the table.
So if you have the Fed cutting rates without the U.S. economy crumbling, that will really help risk assets, right? What are the expectations of where the opportunities could be during that transition for Asia?
Yeah, I think, look, if the Fed starts to cut interest rates, the other item that we really should focus on is there's the passage of the U.S. budget bill that's likely to happen by the end of this week in the United States. So that will be a net positive for pushing forward fiscal stimulus. My concern is that if the Fed starts cutting interest rates into the end of this year with increased fiscal issues, we could potentially see further weakness on the dollar that's going to put upward pressure on currencies, especially in Asia. When I look across the Asian markets, I think, the real question is, are we going to see a CapEx cycle build up? I know the Tenkan numbers just came out and, they look decent, but when we looked at the May industrial production numbers from last night, there was still clear weakness across the export sector from Japan to Korea. I do think that the Bank of Korea has another cut or two left in it in this cycle for this year, as growth for both Japan and Korea remains subdued. It is interesting that we continue to see China post PPI deflation. I think that is going to be a headwind for inflation in Asian markets as well as European markets. But one interesting aspect that in the currency markets, we are all focusing on the crosses with the dollar. But when we look at crosses versus the euro yen is moving up to near-term highs. Euro CNY is also moving up, to near-term highs. And that presents the other big market for exporting for Asian countries outside of the U.S. is Europe. And this gain in competitiveness due to the fact that the euro dollar is rising I think is a potential net benefit for Asian markets.
How do you invest around bonds, sovereign bonds at the moment? Because clearly this is not just a Treasury story, it's not just a JGB story. Is this a global sort of scenario when it comes to the longer end of the curve?
Yeah, I think we're avoiding the long end of the curve globally, where we prefer to be underweight across developed markets at tenors above 10 or 15 years. So really the super long end of the curve, whether it's Europe, Japan, the UK, as well as the US, we prefer to be underweight there. But what we do think is likely to happen is we think that a virtuous cycle is likely to start building up with capital flows moving away from just US assets back into international markets. I think that is going to be, a net benefit to the global economy over the next year or so, with its with the best expression of that being in emerging markets. So emerging market local currencies are on the top of our list. We think they're undervalued, they're underowned. The emerging market allocation for many allocators has been on a back burner due to the large risks that that sector has faced historically. But we think that is undergoing a sea change at the moment. We think that large fiscal stimulus and the redirection of capital is only going to increase capital to emerging markets such as India, Indonesia, and other ASEAN, emerging market countries that present very interesting risk return characteristics when we look out over the course of the next year and a half. So that's the next, outside of avoiding the 30-year, we are actually increasing allocations to our emerging market local currency strategies. And that's, we think, going to be a very interesting place for investors over the coming quarters to, maybe the next several years.
What about allocation to China?
We're still a little bit hesitant on the allocation to China. I think that we saw the decent growth so far this year was really supported by pull forward of fiscal stimulus. And then we need to watch very closely what's going to happen with the July Politburo meeting. It's my expectation that we're going to see maybe an underwhelming of what the expectation for fiscal stimulus is out of that meeting. And the reason for that is the better than anticipated tone of trades negotiations that are happening between the US and China. China is going to save its bullets. When we look at the Chinese property sector, we continue to see stresses. We heard from the PBOC over the weekend that they pulled back on the explicit, their explicit messaging for near-term RRR cuts if necessary. They're pulling back on that dovish rhetoric as well, and that's going to, potentially slow growth at the margin. Now, that being said, I don't think you're going to have an imminent collapse in China. I think what they were trying to do was manage what potentially was a large exogenous risk of trade negotiations with the US, which are now trending a little bit better. But ultimately, I think a lower trend growth rate across the globe, especially the Asian region, is more likely. But I think this is really a capital flow story that not only international investment into the US is going to find new places, but China is going to be looking to find additional markets, not only to sell to, but also to invest in. And as we know, China takes a long-term approach to investment. When they come in, they offer cheap capital financing, and that tends to be a net growth driver for the emerging market countries that partner with China.
Bill, great to have you with us. Bill Campbell is a portfolio manager at investment management firm DoubleLine. And a reminder, you can see live coverage, Shery, of that major monetary policy panel later today from the ECB forum in Portugal. That's moderated by Francine Lacroix at 9:30 p.m. if you're watching in Hong Kong. More ahead on the Asia trade. This is Bloomberg.
Bloomberg has learned that the EU is willing to accept President Trump's 10% universal tariffs on many of its exports, but wants lower rates on key sectors. Bloomberg editor John Herskovich joins us for more on this. And John, of course, they want this to be dealt with in the beginning, so this doesn't just stay as a sticking point, right? How close are we to a deal with the EU?
Sure, we're looking at something which could be an interim agreement. The EU is kind of willing to accept this 10% universal levy, and as you said, they're looking for a carve-out for key sectors, and they're also worried about these sectoral tariffs that are already in place on steel, on automobiles, and perhaps ones that may come down the line on pharmaceuticals, semiconductors. So they're looking at something where the sectoral tariffs come down, the ones that could be imposed don't get imposed, the ones that are there are reduced, and they're having a delegation in Washington for talks this week. So we're getting some feeling that an interim agreement is in the works and things are looking better on the European front.
On Japan, it was really interesting to see President Trump talk about Mr. Japan's rice issues.
Yeah, oh, it's kind of different. Yeah.
Two different things.
Yeah.
He's going to write a letter to Mr. Japan, but he's also tweeted about rice.
Exactly. Yeah, no, it's like it's one of the difficulties for Japan is like how do you negotiate with this? Things change quite quickly. So the prospects for a Japan deal by the deadline just aren't looking good. Automobiles are still a stumbling block. Rice came up today, and Japan is looking for something comprehensive, formulaic, that they're going into these talks with a serious negotiation to do something big, and the goalposts keep shifting day by day with Trump. So it's much more difficult with Japan.
Could we potentially see retaliation from trading partners?
The European Union has already outlined about $21 billion in retaliation for the first round of tariffs, and if things go bad, I think they have another $95 billion lined up that they could impose on U.S. products. Japan hasn't really spoken yet about retaliation. It really depends on how things go. There are a few things going on in Japan. We have this deadline for the trade talks. We have upper house elections, which are a key test for the government. If they're seen as giving away too much to the U.S., this could hurt the prospects for Prime Minister Ishiba and his ruling LDP. And how things go with these trade talks, with the deadline, and with the election really could determine how Japan goes forward. But up to now, retaliation hasn't been something that Japan has publicly mentioned.
I really feel for Japanese policymakers because you really won't find a country that's a stickler for rules and stability like Japan, and then having to really negotiate with somebody who's as mercurial as President Trump. But as you said, rice is still the sticking point.
Yeah, no, rice and automobiles are these sticking points. And the thing is, like, the rice market is smaller. There could be some concessions there. But I've been doing the Japan thing for a long time, and the U.S. has been trying for decades to get access to the auto market. The Japanese consumers just aren't really, there isn't a huge demand for U.S. cars.
The big F-150s, will they even fit on Japanese roads?
Exactly. Jeep has done the job. You see the Jeep brand in Tokyo. They've moved the steering wheel to the right side of the car for Japanese roads. They have dealerships, networks. It's tough to sell cars in Japan. It's highly competitive. U.S. has been trying for decades. There have been small instances of success, but consumers here just don't want the big cars that Americans make.
Bloomberg's East Asia Government editor John Herskovich there. Well, Treasury Secretary Scott Bessent says U.S. trade negotiators are amazed at the kinds of offers they're getting from other countries as the July 9th tariff deadline looms. Bessent told us more about what to expect as these talks enter the final stretch.
There's going to be a flurry going into the final week as the pressure increases.
What can you tell us about what's coming out of those deals? Are they inked deals or are they negotiations for future deals?
Well, what I can tell you is that the staff level, whether it's at Treasury, at USTR, at Commerce, people who've been around for 20 years are in amazement, and they're saying these countries are coming with offers that they can't believe. So in terms of bringing down tariffs, non-tariff trade barriers, we're leaving aside currency, the financing of the labor and capital in an advantageous way. All these countries are pulling back.
So you've said that trade negotiations could be wrapped up by Labor Day. How should investors and nations impacted be thinking about that July 9th deadline? And could that be pushed back to avoid going back to those April 2nd tariff rates?
Well, that's going to be up to President Trump. And I'm not going to tell any country. We have countries that are negotiating in good faith, but they should be aware that if we can't get across the line because they are being recalcitrant, then we could spring back to the April 2nd levels. I hope that won't have to happen. We have seen no inflation from tariffs. If we do, which we don't have to, then there'd be a one-time price adjustment. Nothing is more transitory than that. So, Team Transitory, having failed the American people in 22, they seem a little frozen at the wheel here.
U.S. Treasury Secretary Scott Bessent there speaking with Bloomberg's Sonali Barsak. Coming up next, Apple said to be considering using OpenAI or Anthropic to power Siri as its struggle with generative AI continues. We have the details of our Bloomberg scoop next. This is Bloomberg.
Do keep an eye on Apple suppliers in today's session. Of course, Bloomberg had learned that Apple is considering using artificial intelligence technology from outside instead of their own in-house models to power a new version of Siri. For more, let's bring in Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh, joining us now from New York. So, Mandeep, in fact, they've been talking to Anthropic, they've been talking to OpenAI, but not necessarily Google. Why?
Well, so look, Apple Intelligence obviously didn't catch up to, all the innovation that was going on in the generative AI space. And now that they have admitted, they had to pick a partner. And Anthropic, to me, is the most obvious choice because they don't really have a big consumer brand like OpenAI has or Google has. And OpenAI has said that they have their own hardware ambitions. So to my mind, Anthropic has a high-quality model that's comparable to a Google or an OpenAI, and that's why it makes a lot of sense for Apple to embed Anthropic model. But this space is moving fast, and Apple has a lot of opportunity in family of apps like calendar, email, and browser. And so better late than never. I think they had to do this, and they are making a call that their own models are not just good enough.
And it is a bit of a strategic and, I guess, reputational retreat, right? Is it going to be meaningful when it comes to the upgrade cycle for devices and also encourage consumers to upgrade?
Well, the good thing for Apple is the expectations are really low. So I think what Apple has done well is clearly created a very closed ecosystem where it's very hard for consumers to, switch to some other ecosystem like Android or anything else outside of iOS. So from that perspective, I think it's hard for consumers, even though they are not offering generative AI functionality on their current devices. And if Apple is able to integrate Anthropic or OpenAI functionality relatively quickly in their Siri or their family of apps, I think that can drive a refresh cycle because the expectations are really low. So from that perspective, even low single-digit growth or mid-single-digit growth in iPhone units would beat expectations. So from that perspective, I do think this is a positive set in kind of development in terms of driving that refresh cycle.
Let's talk a little bit about why those expectations are so low in the first place. What's wrong with Apple's own in-house AI model?
Well, so Apple has clearly underinvested out of all the hyperscalers. I mean, we know about their CapEx spend. Microsoft is spending close to $80 billion. Google is spending $75 billion. Meta is spending $70 billion. Apple's CapEx spend is less than $10 billion. So clearly they didn't spend enough in terms of developing their own frontier model. But what Apple has is they own the distribution. They own the time consumers spend on smartphone devices. It happens on their operating system and their devices. And so from that perspective, they still have a lock on distribution. But everyone kind of assumed until and unless they partner with somebody, the refresh cycle is going to be delayed. And that's why the expectations have come down so much. But look, once we start seeing the functionality roll out in Siri, in the family of apps, that's when the numbers keep getting revised upwards. And that's where the multiple should also expand in terms of the stock price.
Our Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh, on our Bloomberg Scoop on Apple. One of the other stories in tech that we're following is Meta CEO Mark Zuckerberg announced a major restructuring of his firm's AI group that includes a series of new hires. Meta's AI efforts will now fall under a new group called Meta Superintelligence Labs. Superintelligence refers to systems that can do tasks as well as or even better than humans. Alexander Wang, who's a former CEO of startup Scale AI, will lead the new Meta group, according to the internal memo. Wang will serve as Chief AI Officer.
And Haidi, one stock that we're watching here in Japan, Sumitomo Realty, activist investor Elliott not happy with this company, saying that Sumitomo must address its poor shareholder returns, saying that low approval rates for members of senior management reflect investor dissatisfaction. We have more ahead. This is Bloomberg. Continued pressure on the Bloomberg Dollar Index right now, down 0.1%. We're, of course, talking about already having seen the longest monthly loss since 2017. In fact, when it comes to the dollar index itself, the worst first half since 1973. Not a lot of movement when it comes to U.S. futures as we continue to watch the deliberations in Congress. They're trying to pass that $4.5 trillion tax bill from President Trump. The thing here is that you have to watch at the distribution effect, right? The Budget Lab at Yale University saying that the tax cut bill could cost the bottom 20% of taxpayers an average of $560 a year, while giving an average boost of more than $6,000 to the richest. Of course, this will come with spending cuts of more than $1 trillion, Haidi, which will reduce spending on a lot of issues and a lot of programs that help the most vulnerable, including Medicaid.
We continue to watch the domestic politics in the U.S. In the meantime, of course, we're also watching the growth pulse when it comes to Asia as the world continues to contend with the uncertainty over Trump's tariffs and some of these trade deals that are yet to materialize before that July 9th deadline. Take a look at what we're watching when it comes to some of these PMI numbers that have come through from the likes of Japan to Indonesia. We are seeing for Japan a little bit of a rise above that level that demarcates growth from contraction, just over 50 there. South Korea actually seeing a little bit more strengthening, but still in contraction territory. We're seeing Taiwan seeing a worsening picture there, as well as Indonesia and Vietnam. So a lot of these indicators are really suggesting that that sort of forward-leading indicator when it comes to manufacturer confidence and orders are looking a little bit weaker. Thailand, though, one of the few that is seeing a bit of an improvement from 51.2 to 51.7 in the latest reading. Well, Chinese Foreign Minister Wang Yi has begun his week-long trip to Europe aimed at countering U.S. tariff pressure by improving ties with other trading partners. Let's bring our China correspondent Min Lo in Hong Kong. And Min, this is sort of one of the longest diplomatic and trade relationships that China has with Europe and specific European countries. So what's on his agenda?
Yes, Wang Yi is going to be in Brussels. He's going to stop by Germany as well as France, and he's there to make the political preparations ahead of this expected summit, EU-China summit, that is expected to take place in the second half of July. And there are a number of issues that the two sides need to resolve before then. And top of mind for the EU is the exports of rare earth, because the EU has pretty much been caught in the crosshairs between US and China. When China required permits, export permits for rare earth exporters, the volumes exported to the EU had also fallen by about 81% in May. And this is a material that is critical for the manufacturing of cars, high-tech sectors, and it's going to be one of the top issues that EU officials will discuss with Wang Yi. And the second second thing is the trade balance as well. You look at China's trade surplus with the EU this year, it's reached a record high in the first 5 months of the year. And that's again because of that tariff war with the United States. Chinese exporters are looking for alternative markets. And where are they going? They're looking for open economies, rich economies. So EU is one of the top destinations. And on top of that, you have a slew of other historical issues that Ursula von der Leyen has been very outspoken about, including what she calls the China shock, how China has been dumping its overcapacity problems on the EU, and how China has been weaponizing some of its supply chain dominance to undermine competition in other countries. There is the tariffs on Chinese EV, there is the restriction on Chinese medical devices and their ability to bid for public procurement contracts in the EU. And the Chinese side has retaliated so far with probes into European pork and brandy. But as a gesture of goodwill, China has delayed the outcomes of these probes. So again, could be a gesture of goodwill, could be again another leverage that China would use if talks don't go well.
And the EU's trade grievance is really not helped by a cheap yuan that's making Chinese products really competitive in the European market, right? The euro closing at the strongest level since 2014 against the yuan. What is this also telling us about the PBOC strategy when it comes to managing the currency?
Yeah, this is a dollar softness story, right? The dollar is at its lowest point since 2022. We've seen the euro climbing against that, EM currencies as well. But granted, yes, a lot of attraction to the euro because of the domestic conditions there, the increased spending fiscally. But then, that's why you're also seeing a little bit of signs of being overbought if you look at the 14 days relative strength index. But you look at the yuan and you compare that against its basket of peers, whether it's the Asian currencies or the EM currencies, the yuan actually hasn't risen as much as many of its peers. And it shows you that PBOC is carefully controlling the pace of the rise of the yuan. We did see the PBOC setting the fix yesterday stronger than expected. We'll be watching the fix today. But again, as you said, the big advantage is it puts Chinese exports at an advantage. It makes it very attractive to the European market. Could be another sticking point with European officials as well. But could be a boon for Chinese markets going forward if this trend continues.
Bloomberg's China correspondent Min Lo there with the Wang Yi Europe visit. But take a look at what we're watching when it comes to currencies. This along the back of the dollar set for the longest monthly slide since 2017. This was, of course, also the worst 6 months for the greenback since 1973. So seeing that sort of weakness fall into month-end trading and headed for the longest run of monthly losses in 8 years. There's been a confluence of factors that are playing out when it comes to these dollar trades. The latest version of Trump's massive fiscal package that's working its way through Congress, these Fed expectations, as well as, of course, a lot of the trade and tariff-related uncertainties there. Dollar yuan not doing too much at the moment. We have seen quite a sustained move when it comes to the likes of the Taiwan dollar, as for example, slumping by the most since May 2001. We've seen some of those efforts from the Hong Kong Monetary Authority when it comes to stabilizing the Hong Kong dollar and defending that dollar peg there as well. At the same time, we're also seeing the strength in the euro hitting its strongest level since 2014 against the Chinese yuan. So perhaps euro-yuan might be the more interesting rally to be watching at the moment, Shery.
And Haidi, we're also watching the Korean won, which is now trading at the highest level since October of last year. South Korea's more than $200 billion sovereign wealth fund also making a big bet on North American investments, with the region accounting for more than 60% of its holdings. Korea Investment Corporation CEO Park Il-young told us exclusively why U.S. treasuries are a key part of that strategy.
We are happy to the investment in the U.S. Treasury, in a sense that the U.S. Treasury bond gives a very strong liquidity and stable returns, and also regardless of any short-term market volatilities, we are expecting the stable and the solid returns in the short term. So for the time being, we maintain our portfolio, the treasury bond as the core portfolios. But in the longer term, we are mindful of any risks from the supply the change from the investors, and also some policy uncertainties.
Long term, do you need to be rethinking that? How are you looking at your exposure to U.S. Treasuries longer term, and how are you looking at potential alternatives to U.S. Treasuries? Are there alternatives?
We are now reconsidering our asset allocation. We understand our long-term the returns are largely depend on our asset allocation. So among the fixed income investment, we are also interested in investing the credit, and credit bonds and the structural bonds, along with the U.S. Treasury, and also more fundamentally we are now considering to our asset allocation between the fixed income, the global equity.
Do you see alternatives to public fixed income, and would you be looking to increase your weighting into things like private credit, for example, and private lending? And what role do you see that part playing in your portfolio?
Actually, we just start with the investment in fixed income in 20 years ago. Now we diversified our portfolio to the alternative investment, including, as you said, private equity, and real estate, private credit, and the infrastructure. So we believe the alternative investment will be our core asset in our portfolio in the longer term. So we plan to invest continuously, and steadily pace.
Haidi on KIC Chairman and CEO speaking exclusively with Bloomberg's David Ingles. Take a look at how we're trading early in the Asia session, because we're seeing Japanese stocks falling for the first time in 6 sessions. We do have a stronger Japanese yen against the U.S. dollar. That potentially hurting some of those manufacturers that export overseas. When it comes to the Kospi, though, gaining almost 2%. We've actually seen exports from South Korea in the month of June rebounding, still coming in below economists' expectations. You can see the year-on-year number when it comes to imports also surprising to the downside. But when it comes to those shipments, it's still a rebound from the previous month. And of course, all of this ahead of those blanket tariffs expected to resume on July 9th. We could see a trade deal anytime as well. This is Bloomberg.
Foreign ministers of the so-called Quad grouping set to meet in Washington. U.S. Secretary of State Marco Rubio is hosting the gathering. Australian Foreign Minister Penny Wong is attending, and representatives from India and Japan. In January, the ministers recommitted to working together, saying they would meet regularly to prepare for an upcoming Leaders Summit in India expected later this year. The 4 nations share concerns about China's growing power in the Indo-Pacific. For more, let's bring in Charles Edel, who's the Senior Advisor and Australia Chair at the Centre for Strategic and International Studies. He previously served on the policy planning staff for the U.S. Secretary of State John Kerry, focusing on Indo-Pacific security issues. Charles, really great to have you with us. And of course, this sort of more clear-cut strategic directive at curtailing China becomes a lot more muddled when it comes to the various trade tiffs and tariff uncertainties that the U.S. has going with a number of these countries. How complicated does this become, particularly at a time where there's also grabs about Trump wanting Indo-Pacific allies to be spending more on defence post the NATO meeting?
Yeah, it's a great question, because the impetus for the Trump administration is to reaffirm the importance of the Quad. It's also the shared objective of all the other 3 countries that are going to be joining them too, to make sure that they can present as united a front as possible about what the Quad contributes to regional stability, to regional prosperity, to regional security. But of course, that cuts against the narrative of Washington imposing tariffs on these three countries and everyone else in the world. So that is clearly one of the issues that will be discussed about how to promote their cooperation, how to deepen collaboration, potentially in the defense realm, while at the same time mitigating some of the downside of the U.S. tariff actions that it's taken on these countries.
President Trump has a pretty unorthodox approach to diplomacy. We've seen Anthony Albanese turn up to the G7 only for Trump to leave before they could have their one-on-one. What are the stakes for Australia at this point, and how do you best, I guess, assess that relationship and the importance or lack of importance perhaps being attached?
No, I think the U.S.-Australian alliance is understood as very important on both sides of the ledger. The fact that Anthony Albanese has not yet met with President Trump, despite the fact that they've had a couple of phone calls, has now become something of a thing because it's been multiple months, multiple missed opportunities. But that in and of itself should not be taken nor understood as a understanding of where the bilateral relationship is. The United States sees Australia as a very trusted ally. That doesn't mean that there aren't friction points between the two. That's clearly going to come up in terms of the tariff imposition, in terms of the increasing U.S. pressure for Australia to spend more on its own defense, and for the ongoing AUKUS review. But given the background, the historical ties between the two, and the deep cooperation on almost all levels, this is a relationship that is too big to fail for both nations. So they really are going to get after these and discuss those points of friction.
How important is the critical minerals cooperation between these two countries, both on a security level and also at the trade level?
Yeah, increasingly so, Shery. Critical minerals obviously are an important, have been discussed between the two. But as China has weaponized its access to critical minerals, to rare earth minerals, this is something that potentially is an area of great growth of collaboration between the two. In fact, about a year and a half ago, Australia and the United States signed an agreement to expand their work together on clean energy, on climate change, and on critical minerals. Under the Trump administration, they're not going to be talking about climate change too much, but critical minerals is still clearly part of what they're going to be doing. And Anthony Albanese, in his re-election campaign, talked repeatedly about the importance of making sure that there was a trusted supply chain for the United States and other allies. So this is an issue that has been important, but is becoming increasingly so for both trade and national security purposes.
Charles, in the broader Pacific, we know that U.S. engagement with the region has revolved around development assistance. But given Washington's really retreat from that space, is that going to be a hurdle going forward?
Yes, that's about as blunt of an answer as we can say. The United States has, over the last several years, stepped up its engagement with the Pacific. This actually started under Trump's first presidency, where he invited the leader of the COFA nations, Palau, Marshall Islands, Micronesia, to the United States. It expanded under the Biden administration, but as you rightly note, the State Department has cut, or at least said that it's all of its development assistance is under review. At a time when China is increasing its footprint, when the United States has claimed that it's going to be opening more embassies, this is an issue of some concern about how the United States can work with the Pacific if it's seen as only episodically engaging. So that will be an issue of discussion between them about what they are doing and where this review at the State Department might land.
Should Australia be doing more, given that it is, when it comes to a lot of these Pacific nations and islands, in our own backyard, right? We know that even just in the latest op-ed from the Global Times, the accusation of Australia taking on the Monroe Doctrine mentality when it comes to opposing Chinese aid and investment in some of these economies is really being subject to pushback from Beijing.
Yeah, I think we all know that we won't take the words of the Global Times too seriously. But your question about whether or not Australia should do more, we should note that Australia is already the largest bilateral giver of aid and development assistance across the Pacific. The question is, should Australia do more if the United States is doing less? And there is clearly discussion of that in Canberra. I know that there was a review undertaken of what Australian equities would be affected if the United States stepped back. But Australia, like every other nation in the world, has a limited amount of resources, so it needs to think carefully about where it's going to put them.
I wanted to end with a question on AUKUS. There's obviously numerous reviews that are either ongoing or have already happened. Do you think Australia should be conducting a review? Do you think that AUKUS remains on stable footing going forward? Does it still make sense?
So let's take those questions in reverse order. Does it still make sense? Yes. The strategic objectives about getting more capabilities, particularly submarines, into the water to balance China's increasingly aggressive stance, absolutely still makes sense. In terms of should Australia undertake its own review, it has undertaken its own review. A non-public review was conducted and delivered to their government recently. This is in line with what the Brits have done as well. They also had a non-public review that was delivered to government. In fact, the Americans are the only one who have not conducted a strategic review of AUKUS. So the timing of a review makes eminent sense. AUKUS's goals and objectives still stand, I think, but that's not to say that they haven't had problems moving it forward. And to understand how they can move it forward is, I think, critical at this point. There's a larger question of whether or not the United States is wrapping up or maybe even holding AUKUS hostage to try to get Australia to increase its own defense spending. That's a separate issue that will be discussed with them, but the fact that there's a review of AUKUS shouldn't be a cause of concern.
Charles, really great to have you with us. Charles Edel, who's a Senior Advisor and Australia Chair at CSIS. We have more on Australia Ahead every Tuesday at 10:40 a.m. if you're watching in Sydney, 8:40 a.m. in Hong Kong. This is Bloomberg.
Thailand's constitutional court will decide today whether to accept a petition seeking the removal of Prime Minister Paetongtarn Shinawatra. Meanwhile, a separate court is set to begin the trial of a decade-old royal insult case against her father, Thaksin. Bangkok Bureau reporter Papicha Tanaka-Sempipat joins us now for more on this. Papicha, both Shinawatras facing legal challenges at this point. Is the political crisis in the country only expected to deepen?
For sure, Shery, it's a big day for the Shinawatras, Thailand's political dynasty today, and the political crisis actually does look set to deepen as major events unfold today. The focus is, of course, still on Paetongtarn Shinawatras' leaked phone call with former Cambodian leader Hun Sen, in which she criticized the Thai army's role in a border dispute with Cambodia. And now that phone call is being cited as evidence in a petition launched by a group of senators saying that she had violated ethical standards and should be removed from office. So all eyes will turn to the Constitutional Court today, whether it will make a decision, whether to take the petition into consideration, and whether also it will suspend her prime ministerial duties as it deliberates on the case. Meanwhile, as you mentioned, Paetongtarn's father, former Premier Thaksin Shinawatra, will be present at a Bangkok criminal court today for the first hearing in a royal defamation trial against him for remarks that he made over a decade ago. And of course, we know that the royal defamation law carries a maximum 15 years of jail sentence.
Bisha, what happens if there is a suspension?
If the court does suspend Paetongtarn's prime ministerial duties today, that will set off big questions about government stability at a time when the Thai government really should be focusing on securing trade talks with the U.S. as well as resolving the Cambodian border crisis. In the immediate term, Paetongtarn's first deputy prime minister will step up as an acting prime minister while she waits out a court verdict, which could take weeks or months. And the suspension will also cast major doubts over a new cabinet reshuffle, which was finalized last week in order to solidify support among her remaining coalition partners. But the problem is that cabinet lineup has not yet been endorsed by the king. So in any case, if the court does take the case into consideration, then we may need to consider a scenario of a new prime ministerial vote as well, because if you will remember, Paetongtarn came into power last year after her predecessor, Seth Thavisin, was removed in a court ruling.
was our Bangkok Bureau Chief, Bureau reporter there, but picture Tanaka Semperpat there. That is it for the Asia trade. Our markets coverage continues.